We're back with a special show to make you not just a better investor, but a better speculator. If you've watched this show for only a couple seconds, you know that I am not a fan of buy and hold. Antiquated strategy meant for a time when brokerage fees were so high that it really didn't make sense to make too many transactions. They ate up all the gain. Well, that hasn't been what the game has looked like for decades now. And while I always hate buy and hold, it's even worse when we're speculating. Because you see, speculative stocks, let me get anatomical. They got life cycles. Buying 100 shares of the latest hot nanotech company in 2005 is a lot different from buying 100 shares of IBM 50 years ago. These stocks are born, they grow very quickly, and then they die very quickly. Cicadas. You need to pay attention to where we are in the life cycle of these stocks if you want to actually book some gains. Let me give you an example just to show you how this looks. Back in 2003, Taser. Well, now, of course, when you hear Taser, you just think, you know, sell. But it wasn't always like that. Yeah, at one point it was hovering below $5 a share. Then it was worth $100 million. I spotted it on my old show. What was that? Yeah, old show. And said it could go to $1 billion market cap. People laughed. They thought I was a joker. And then it did. They still think I'm a joker, but that's okay. You can't convince some people that it is. Once it got there, I told everybody to get out. Shortly before it started coming down again. You could have made a fortune speculating on Taser if you understood that it was just fulfilling its end of the life cycle bargain. Here's how I did it. First, of course, you've got to identify whether or not the stock is actually part of the right species. I'm belaboring this metaphor. Stick with me. A lot of people like to speculate on telecommunication stocks, and you can do that. I've done that. But Lucent and Nortel aren't fireflies that burn brightly and then flare out. They're not going to go from 3 to 30 in this day and age, like Taser did. Taser had, first of all, a good balance sheet and sound management. Remember, although the word speculate is charged emotionally, we never speculate on stocks with bad fundamentals. We don't go near stocks with bad fundamentals. That's why it's no disgrace on this show to talk about speculation, because we're speculating on good companies. More important, Taser at that point had a unique product. Taser saves lives! That had the potential to become a very, very sexy idea very fast. The market for stun guns hadn't been cracked in 2003. But as soon as 1 or 2 police departments put in orders, a lot of people were going to bet that Taser would be selling their product to every police force in the country. That's it. See, that's it. That's the kind of thinking. That's the kind of thinking that drives the stock up. You want to be in there before they make an announcement like that. You want to be looking for these things before the news breaks. I love our policemen. They do an incredible job. But you know, doing an incredible job can mean accidentally killing too many people. And that was why Taser looked sexy before it had any orders from the police. Finally, and this is key, most of you don't get this, so listen, this is really important. Taser had a really small float. That's the number of shares that trade. It's not the number of shares outstanding. It's the number of shares that trade, that are registered to trade, that are free to trade. You're not always going to find this, but when you do, it's wonderful. We saw it in Hansen too recently. It means that if a big institutional buyer decides he likes Taser and wants to pick up a lot of shares, that stock's going to move. It's going to get bid up quickly, a lot more quickly than if it didn't have such a tight float. That's how you know what to look for. But after these stocks get bid up, they're going to give back some gains well before the fundamentals turn against them, well before you're going to hear me saying, I don't like that stock, and people can say, oh, the fundamentals are still good. But when we're doing this part of life cycle analysis for speculation, you got to get out ahead of the turn. You need to be able to know when to get out. And the way to do that, we got a lot of things here on this show that you got to look at that you don't look at right now. You can look at the volume of shares that is trading day to day. After the initial run-up, the volume, the number of shares traded in a given day, is going to go down. So everybody who wants the stock gets some. When the volume starts to spike again, that's profit-taking. And profit-taking done en masse is what always takes these stocks down. So watch for the volume. When it spikes, when it expands, you got to cash out. You take your profits and find greener pastures. If you forget to sell in these speculative stocks, I got to guarantee, I never offer guarantees on the show. You will probably lose all your money. Need an example? Look at what happened to Broadvision, BVSN. Not that anybody wants to know that now when I tell you the story. Oh, it got bought out not long ago for 84 cents a share. This was a company that made software applications for e-business. Oh, remember in the 90s, this stuff was priceless. Everybody wanted stuff like Broadvision. But let's look at what happened if you just bought it and held on to it. If you did the so-called buy and hold that all the graybeards say is the right way to play. Let's say you picked it up at 839 bucks. That happened to be its all-time high in 2000. How would you done? Let me do the calculation. 839 bucks. Oh, you would have lost 99.89996% of your money. Buy and hold for you. But let's be more realistic. Say you didn't get it at the top. Say you bought it at 73 bucks in 1999 when it was cheap. Well, then you would have only lost 98.86102% of your money. Let's be more generous. Let's say you picked up this company the week before it got its bid. It was at $1.40. Well, then you'd only be out 31%. Of course, maybe if you'd done your homework, you never would have bought this trash to begin with. Those are the kinds of returns buy and hold generates in a speculative stock. You need to get out before the idea dies. It's very different from being in trying to game a stock like an Intel or like a Dell. These things have a life and then they die. So remember, look for a good balance sheet, a sexy product, a tight float. Then close out your position after the stock has run and the volume expands. That's how you play the life cycle of a speculative stock. And the bottom line is, if you don't get out when the volume expands, that's your fate. Joe in Fort Hood, Texas, you're on. What's going on, my friend?
Hola, Jim. What are you up to?
I'm having a good time. How about you?
All right. Hey, I'm calling from Fort Hood.
Oh, bless you, man. That's fabulous. How's it going down there, guys? Watch the show?
It's it's hot. I'm on my 2 weeks leave from Iraq.
All right.
And I wanted to tell you,
hold on just a sec. Thank you for serving, and thank you for going there, man. You're doing a great thing.
Thank you, no problem.
All right.
I wanted to tell you, I'm such a big fan that while I'm over in Iraq, I make my girlfriend put the webcam in front of the TV just to watch you.
That is fabulous. That is fabulous. Thank you, man. Thank you.
No problem.
All right, let's make money together. What's on your mind?
My question is, I want to know how you value research companies when they don't have a lot of revenue.
Very, very difficult. I am always willing, Joe, to suspend the notion that you need to have earnings when it comes to speculation. Now, immediately, probably a lot of you are saying, Jim, that's reckless. When we're speculating, we don't need earnings, but we do need sales or revenues. Joe, the bottom line is, when I hear about a company that has no sales, no revenues, I don't speculate in it. Too hard for me. Lost too much money. Let's go through it. Pay attention to the life cycle. Stay away from stocks with bad fundamentals. Look for a good balance sheet. Look for a tight float. And know when to get out when they start selling like mad. After the break, I'll try to make even more money.
This is Mad Money. Jim.